their target for unemployment, potentially below 6.5% before they decide to make some move on the tapering front. Do you think that is going to happen? Should it happen? What's the consequence if it does?
Well, our view is that it's probably not going to happen, at least right now, but the consequence, which I think is your real core issue, and I'm glad you brought that up, is it means that the Fed is not going to be tapering as early as some people had expected. I've even heard people talk about December. I don't think it's December. I think March at the earliest. But to the extent that they do move in that direction in terms of lowering their target unemployment rate, then it means that the tapering is going to be delayed and you're going to have lower short-term interest rates for a longer period of time.
But what about the fact that we had that quarterly GDP number that came in better than expectations? It seems like there's a bifurcation even in some of this economic data we get. So would the Fed get a little bit behind if we are seeing growth that, again, not spectacular, but going the right way?
Yeah, I mean, there is a risk, of course, from the Fed's point of view. If they start delaying the tapering, they may be behind some of the, let's say, inflation pressures, because we saw the inflation numbers yesterday and the GDP number picking up a little bit. So the Fed could fall behind as far as its inflation targets go. That is a risk for the marketplace that you might have better growth, but slightly higher inflation overall. Again, that would be a little tricky for people like in fixed income U.S. Treasuries, especially at the short end of the yield curve.
John, what's your outlook for the economy then as we look out into next year, and particularly for the labor market? What sort of jobs growth are you expecting now on a monthly figure? And this question I think I've been asking everyone for years, when do we get back to the pace of job growth that we had before the last financial crisis?
Our estimate is probably that you're going to have economic growth in 2014 at 2 to 2.5%. That's much better than 2013. I think you're going to have job growth on average 160 to 180. Unfortunately, I don't think we get back to the pace of job growth we had in 2005, 2007. I think we've changed the character of the labor market. You've changed the availability of credit. You have a lot more rules in terms of health care rules and job security rules that are going to limit job growth. So what we have is better economic growth, much more productive existing workers, but slower job growth in terms of new workers.